Hello, and welcome back to another episode of the For the Property Investor podcast. And of course, we're back with the weekly news. And there's only one person that could be here with me on the weekly news segment, and that's, of course, Nick Bendel. Welcome back, Nick.
Great to be here. It sounds like your first choice person was unavailable, and I'm the second choice.
No, well, you're the first and second choice, Nick. So yes, if you want to be the second choice today, that's fine. But you were also the first choice. Yeah.
Okay, well, first and second, I like that. That is so. I'm getting the gold and the silver medal.
Yes, which means yeah, I mean we could give you silver and bronze, but you could still count that as winning, just like the Americans do. Yeah.
Okay. So, usually you insult cities other than Sydney, and now you're insulting countries other than Australia. You're diversifying.
Well, I do have some Americans in my family, so it's been a bit of a topic of debate recently about who's winning the medal tally when they're in fifth place, but have more medals in total than everyone else. But yes, we won't bring this debate to the podcast because everyone else except for America is fine with it.
And now, on a completely unrelated note, what is the largest inland city in Australia?
Oh, I know this one. Oh yes, Canberra.
Canberra, yes, it is.
And what's the second?
Toowoomba?
Yeah, very good.
Okay.
You're trying to test me early in the morning.
I am indeed, and
Yes.
I passed the test.
Yes, and Canberra is our, a very important city in our country.
I've always liked Canberra. I know it can split opinion. I like Canberra. It's got its own unique character, and I'm someone who enjoys politics, so I always like going to Parliament and the War Memorial and all the various national institutions.
Yes, I went there once on school excursion. Yep.
That's all you have to say about Canberra?
Yes, maybe we should get into the weekly news, Nick, before I say anything more.
Okay, well, we've lost all our Canberra and American listeners, and I'm sure there are still one or two people left.
Yes, there are. They tell me they listen every week.
And in terms of what we've been up to over the past week, for those who don't know, I'm the owner of a business called Hunt and Scribe, which is a copywriting agency that writes content for finance and property businesses. And to give you an idea of the sort of work we do, recently we've written some website content for a negotiation consultant, social media posts for a non-bank lender, and blogs for an accountant. And that's typical of the work we do.
And it's very good work, Nick. It's we certainly subscribe to your services, and it's very good work. And I have referred you to many of our business partners, and of which one or two have taken up your services, and I get nothing but great feedback.
Well, that's very kind of you. Now, by the way, that website that we did for the negotiation consultant, do you know how terrifying it is trying to negotiate price with a negotiation consultant?
and did you do all right?
Well, he accepted the price that we gave him without trying to change the price. So I don't know if that means we went too low or what, but he did ask for a faster turnaround time.
Right. Well, that sounds like a successful negotiation.
Well, I was happy. He was happy. So I think it's win-win. And he does preach win-win outcomes, which I'm also a believer in. So it sounds like it was successful for all parties. But I mentioned just because it was a terrifying experience.
Well, I'm glad to see you survived, Nick, because we couldn't be doing this without you.
Well, thank you very much. And what have you been up to over the past week?
Oh, the past week been a bit of a big one. Lots of new business coming in, so as well as a number of properties being leased in the past week, and seeing some interesting things happening across the marketplace in different regions.
Hmm.
So, but I've had a sneak peek at what you're going to be bringing up today, and I think we'll be covering that a bit later.
Yes, that was my thoughts exactly. So let's dive into the news, and then I'm going to ask you for some insights, as I always do. The first of our three stories today: New South Wales unveils rental reforms. The New South Wales government has proposed what it's calling one of the biggest reforms to the rental market in a decade. Under the existing law, landlords can choose to end a periodic lease at any time without needing a reason. But under the government's proposed reforms, investors will need a reason to end periodic leases. The government said reasons may include when the landlord decides to move into the property, when the landlord decides to sell the property, when the landlord needs to renovate or demolish the home, when the tenant breaches the lease, such as by not paying rent or damaging the property, when the property is purpose-built student accommodation and the tenant is no longer a student. Those are some reasons, but other reasons may apply. Also, for those on fixed term agreements of less than 6 months, the termination notice period will rise from 30 to 60 days. And for fixed term agreements of more than 6 months, the notice period will rise from 60 to 90 days. So, Owen, your business, Leafield, your property management business in 5 states. So you are across different regulations, different jurisdictions.
Yep.
With that knowledge, can you tell me, what do you think of the New South Wales government's move to end no ground evictions?
Well, it seems like the New South Wales government are writing their own headlines now with, what was it, in quotes, one of the biggest reforms to the rental market in a decade. Yes, it's not one of the biggest reforms in a decade in New South Wales. There's been lots more that have been more impactful. And it's definitely reforms that they won't really make much of a difference. They are going to make some people's lives more difficult, but those people are just unorganized people who are not sure of what they want to do. The only real difference that it will make is when a owner of a property wants to avoid any conflict.
Hmm.
They can't have a no grounds eviction when a tenant is on a periodic lease only. So you can, at the end of a fixed term, you can still give them the notice period, as from everything that we've received and from your notes on here as well of what you just talked about. You can still give them a notice period at the end of a fixed term. So what's the big deal?
Okay. Well, what about the government's proposal to increase the notice period for fixed term agreements?
Well, again, it's you just need to be a bit more organized and think ahead of time and uh, and ask yourself the question, do you want this property back at the end of the term from these tenants? And if you do, then you just have to think about it a month earlier than you had to before.
Hmm.
So it's a bit of a beat up by the New South Wales state government in terms of it being a big deal. And it's so they're really just shuffling the deck chairs to make it seem like they've made a big change.
The government's also saying that the new regulations, quote, will help to ensure we get the balance right between renters and homeowners. So, Owen, do landlords have too much power under the current regulations?
Well, let's have a look at it. It's tenants need to give what is it, 14 or 21 days notice when they want to leave, and owners need to give what now 60 to 90 days notice when they want the property back. So where's the balance of power?
Hmm. Okay, well, I think on that note, I think that probably sums things up very, very nicely. Thank
Well,
you as
well,
always.
yeah, and to add to it, other states in the country have brought in this legislation, and yeah, it's again we've got the experience of having dealt with it, and it's just a matter of being a little bit more organised.
Okay, well, let's have a look at our second story. National property prices keep rising. Australia's median property price has now increased for 18 consecutive months after rising another 0.5% in July, according to CoreLogic. But while the national market looks quite strong right now, the picture looks different at a city level. Three capital cities are growing very strongly right now. Perth had 6.2% quarterly growth, Adelaide 5% quarterly growth, Brisbane 3.8% quarterly growth. Two cities are growing, but slowly. Sydney had 1.1% quarterly growth, Canberra 0.5% quarterly growth, and three cities are actually going backwards. Darwin had minus 0.3% quarterly growth, Hobart minus 0.8, and Melbourne minus 0.9. Owen, I'd like to kind of get your thoughts about our three biggest cities. I know Leafield, your company is active in all three of them. Firstly, Sydney. What are you seeing in Sydney right now?
It's fairly healthy in Sydney from point of view of there's a small amount of growth, effectively keeping up with inflation, and there's still high demand. Uh, Interest rates have certainly quelled the demand that was out there, but it has had such a high growth rate over the last uh, 8 years, we would say, that it's doesn't have a lot of room to grow at the moment. But due to the lack of supply of new properties coming on the market, the level of demand and supply is fairly even.
What about Melbourne? What are you seeing in Melbourne right now?
Um, Melbourne is still, I mean, it's Australia's second biggest city. It should be doing better than it is. But it seems like it's entered this fairly, flat um, cycle of not really going anywhere. Um, yeah, there's people buying and selling as they need to, but there's not really a lot happening. So the state government there needs to do something to uh, really give people the incentive to be able to move to Melbourne and maybe invest in Melbourne. So yeah.
Hmm. Well, earlier this year, Brisbane overtook Melbourne in terms of median price, and I believe the
Mm.
way, assuming things continue along the same trajectory, Adelaide will soon overtake Melbourne as well.
Which just seems funny.
Well, that might be why you laughed.
Yeah, it's just like weird. So is Melbourne the low-hanging fruit of the best place to invest in because it just has to grow? But when you look at rental yields, it's rental yields aren't screaming at us saying, "Hey, Melbourne's a bargain." So it's don't know. Melbourne's one of those places where we just have to sit back, wait and see. And one day it'll take off. It has to. It's Australia's second biggest city, and I think they're still recovering from a lot of the negative things that have been done over the last 5 years or so in from their state government.
And what about the host of the 2032 Olympics, Brisbane? What are you seeing there?
Yes, well, Brisbane is still growing at a healthy rate, and I we can't really see it stopping. It's rental yields are keeping up, but slightly behind, um, and but still growing at a healthy rate, but not at an extraordinary, ridiculous rate like it had been. in the previous few years. So it's definitely calmed down. It's growing well at a healthy rate. It's still a better option from an affordability and a rental yield point of view than Sydney and definitely Melbourne. So yes, it's if I was to pick one out of those three, that would be a good place to buy, to invest in. It's definitely Brisbane.
Well, thanks, Owen. That's very, very interesting. But what I like when we have a look at these monthly CoreLogic figures, over the past few months, we've discussed different cities, and it's interesting to get your thoughts on how Sydney, Melbourne, and Brisbane are doing right now. And next month, we'll probably discuss some other cities as well.
Okay.
Let's move on to our final story. Investor borrowing rises 41.3% in 15 months. There's been an astonishing increase in property investor activity over the past 15 months, with no signs of it slowing anytime soon. Back in March 2023, when investor activity bottomed out, investors signed up for $7.797 billion of home loans, according to the Australian Bureau of Statistics. But in June 2024, the most recent month for which we have data, $11.016 billion of investor loans were issued, and that's an increase of 41.3%. Owen, do you have any theories as to why there has been such a significant increase in property investor activity?
Yes, absolutely. It's we've seen many markets in the country where where they've been undervalued, and in comparison to other areas, other regions. And so there was an opportunity there to be able to start investing, and where there was good rental yields, and as a result, those markets have increased in value. And and when you've got the yields to be able to pay for the investment, then your interest rate isn't as important. So as long as the yield is there, you can keep holding on to a property for as long as possible. So that's what's driven it. And in different areas, it'd be interesting if we had a breakup state by state, and that would probably reflect where a lot of the purchasing has been done, and I could probably pick it for you. And it'd be interesting to see if it would be the same. And a lot of investors had been unable to buy for such a long time when interest rates were so low. When even though it might sound like, well, investors can borrow just as much, but when they were trying to buy and compete with owner occupiers who were taking advantage of the interest rates being so low, which is great, and this is just shows you the cycle of the property market and how interest rates can affect these cycles and so on. So yeah.
And when you have so many investors, when there's such an increase in investor activity, how does that affect the sales market?
Yeah, well, the sales market, has been affected across different regions in the country as a result of investors, and the rise of the buyer's agent as well. That national focused investor buyer's agent has made a huge difference. So there's a lot of sales agents that have started selling only off market to buyer's agents from interstate in different regions. So that's made a huge difference in the sales market, and it's also with investors, they're not as picky about the color of the carpet or the paint on the wall. They're more open to doing repairs and so on if the property is sold at the right price. And so it means it's properties that might have been harder to sell before for sales agents, might have been might be easier now to be able to sell to an investor because there's an opportunity there to add value. And all of those things are good for the economy, because when people are investing in the property market, and work needs to be done on these properties, then that provides employment for the economy, and with trades and builders and so on. So yeah.
And just finally, this sort of large increase in investor activity, how does it affect the rental market?
Oh, that's very interesting. We're seeing this happen in Perth at the moment, where in the last year or two, with the increased activity in Perth of investors, rents started to take off and go up quite dramatically. And now that we're starting to see a lot more rental stock come onto the market, we're starting to see rents cooling off quite a bit, and even coming down a bit. So they seems to have hit that ceiling. Whether that is short-lived due to an increase in supply, we will have to wait and see. But it shows the exact same thing that we keep rabbiting on about every week almost, Nick, of supply and demand. The only way to bring down prices is to have an increase in supply. And we've seen it happen in real life in Perth most recently, because there's an increase in supply of rental properties and prices have started to come down.
And quick prediction before we leave, who do you think will win the most gold medals at the Olympics, America or China?
Well, the United States has taken over this morning to be on top of the leaderboards. So I'm going to have to go with the United States. It's I have Americans in my family, so it's I think Australia's gone as far as they can. We might win a few more, but yes, we won't be able to compete with the big boys now. And now that the track and field has started, so yes, my money's on the United States.
Okay, love the prediction and love your insights as always into the sales and rental markets across Australia.
Thank you, Nick, and looking forward to seeing you back here with the news next week.
See you later.
Bye.